Hi, I'm Erick Rangel. I'm the Chief Finance Officer for the City of Brookings. And I would like to walk you through our first quarter of 2020 financial highlights. Let's start with our revenues. The following slide shows the revenues from January to March in terms of tax revenue and other income generated. Let's start on the top left side of the slide with the table. The first column on the left side from left to right shows the revenue category. The next blue column, it's our budgeted amount. The one to the right is our prorated based on where we should be on a straight line budget as of the end of first quarter. The third column would be your year-to-date actuals. And then the next two columns are the difference versus budget. The first one has the amount, and the second column has the percentage versus budget. So if we begin with first and second penny, their performance is pretty much flat versus budget with about 0.1% decline. Third penny was actually higher than budget, about 1.4%. Whereas bid tax or the pillow tax, which is the hotel tax, is actually down 23.8% versus a prorated straight line budget. On and all, our sales tax intake is 0.4% below budget or $15,000. It is important to note that these numbers contain some delinquencies in it, which means that there are some tax entities that did not report taxes, and this was reported by the Department of Revenue. What this means is that we're expecting those delinquencies to clear throughout the year, and most likely these tax numbers will increase. If we strip those delinquent taxes, the year-over-year growth is around 3% according to the Department of Revenue. The next two sets of income listed in this table is the property tax and the other income. The property tax is negative just because of timing, as our strong property tax intake is on Q2, as well as other income. It's the first quarter is one of the lowest quarters for other services that the city provides. So it is too early to state our financial position based on this. So I would expect to see an increase in property tax next quarter, as well as other income throughout the summer. The chart on our right just shows how we're comparing versus last year and versus budget. The first column is our actuals of last year. The second column in the chart is actually our actuals this year, and then the third column is our actuals versus budget. And as we can see, so far with delinquencies, we're 1% below budget. But if we strip out the delinquencies, it's actually 3% higher. And versus budget, we're 0.4%. But if we strip out the delinquencies, I expect to be positive versus budget. The last point I want to make in this slide is that these numbers do not include a lot of the COVID impact that we've been experiencing in the last few months. As you may all recall, the COVID started at the end of March. So we will expect to see the full impact on the second quarter and not this quarter. Moving on to the expense side of the equation, the following slide talks about the January to March budget versus actuals. Let's start with the table on the left side, which shows the expenditures by department. The next column is the budget, then the prorated budget based on first quarter. Then we'll look at our actuals. The yellow column highlights how favorable or unfavorable we are against the budget. And then the last one is the percentage of expense used. At this point, we should be at 25% or lower, given that it's the end of the first quarter. As a total, the general fund is at 21% usage, which represents about 676 surplus versus a straight line budget. There are some departments that are a little bit over budget, but most of them are due to retirements that haven't been allocated to the right account or due to timing of payments. On the right side, we can see the CIP work and all other expenses. So in terms of our capital budget, only 3.7% has been used at the end of first quarter. And that just, it's due to the timing, because most of our work is actually performed during the summer or in the fall. And lastly, as a grand total, we're 13.2% favorable versus budget at the end of Q1. This represents a $6.5 million of favorability. Now moving on to the first quarter profit and loss summary for the Swiftel Center. As a reminder, this information was requested by our city council at the end of last year in order to monitor the quarterly performance of this entity. And the table on the left side shows the P&L. We can see all the revenue in the different categories that it was generated, and then the expense and the different categories of expense. The three columns that make up this table are the year-to-date actuals, then the budget, and then how does that compare to the annual budget. As a highlight from these results is that the Swiftel Center is about $87,000 below their revenues, and that's the number on the left side. If we compare that to their budget, which they were expecting at this point of time to be at $3,000 below their revenues, they are at about $84,000 deficit versus budget. It is important to note that this entity was tracking slightly at budget as at the end of February, but it has been highly impacted by the COVID effect. It is also important to note that along with other city departments, the Swiftel Center leadership has reduced their 2020's operational expense by just over 30%. In addition, due to their LLC designation, Venue Works, who's the managing company of the Swiftel Center, received over $250,000 in SBA loans through the CARES Act and Payroll Protection Program. This amount will be used to cover payroll and utilities for 2 months. It is also important to note that this number is not reflected in Q1 as the amount was received in Q2. So far, the revenue initiatives implemented at the end of last year have yielded around $2,000 in positive income for the Swiftel Center. And lastly, I'd like to highlight that the Swiftel has partnered with the United Way to make over 3,000 meals per week, which ICAP delivers as a part of their 60s Plus dining program to our community. Next, I'd like to share our financial update due to COVID. And I'd like to start by saying that our city leadership has developed a 10-step action plan that would keep critical services running even with several revenue shortfalls. This is what we call our financial response plan to the COVID effect. This estimated revenue loss is about a 30% reduction in sales tax, a 10% reduction in property tax, and a 30% reduction in other income. Granted, we wanted to be ultra conservative to make sure we could plan for the worst. As a result of these efforts, our 2020's approved budget will be managed to approve even more reductions than we currently delivered. Our operations will reduce their expense by around $825,000 from the general fund. And I'd like to remind that prior to passing last year's budget, our operations were reduced by about $1 million to be able to achieve a structurally balanced budget. So this is on top of what we cut before passing this budget. We're also reducing about $1.4 million in non-critical infrastructure projects. And we're also reducing $1.17 million in the Swiftel Center operational expenses. Our city leadership will monitor our tax income and our expenses on a monthly basis, and we will adjust accordingly. Given that the COVID-19 economic effect was present in all of April and only in the last 2 weeks of March, we thought it would be good to provide what we're seeing so far in terms of April's revenue intake. The overall adjusted tax collections for the month were about 1.5% or $18,000 lower than the previous year. This means that year to date, our total tax revenue is 1.1% lower than last year and about 0.8% below our prorated budget. And even though we were preparing for the worst and our April results weren't as bad as what we were forecasting for, we believe it's important to highlight that there are a number of factors that help April that may not hold true in the next few months, such as higher volume in grocery store industry and certain retailer sales, the effects of the Paycheck Protection Program in our community, and a moderate unemployment rate level. However, there were some industries that are starting to see a high impact. Our 3B or our tourism tax was 31% lower than the previous year, as well as our bid or hotel tax was 32% lower than the previous year. It is important to highlight that the bid tax is reported in 1 month lag, so these numbers are actually for March and not for April. The overall story for April is that even though we did see some declines in sales in some industries, they were offset by some increases in other industries. However, we believe that May's numbers will show a true impact of what we should expect with COVID for the remainder of the year. And lastly, we'd like to provide an update of the City Council priority project list. If we start with the general fund reserves, we have about $5.5 million available based on the information that we have now after meeting all our general fund reserve balance and the stabilization reserves. Now, analyzing the current city approved projects, we have the indoor rec, the food bank, and the interchange project. After taking those out, the estimated cost for there, our available funding for other projects would be $3.5 million. Moving on to the primary projects, we have certain facility maintenance projects for this year and the next 2 years, a Parks Master Plan and a Downtown Master Plan. After factoring in this suggested primary projects cost, our total unapproved primary funding would be $36,000. And lastly, our secondary projects are projects that are not currently recommended or being funded. However, it'd be important to consider them as we know more information about our availability of funds. The total amount for these projects right now, it's about $6.1 million. And that's the end of the presentation. If you have any questions or comments, please feel free to reach out to me. Again, my name is Erick Rangel, and I'm the City of Brookings CFO. You can send me an email or call at 605-697-8640, and my email is erangel@cityofbrookings.org. Thank you so much.